Hey everybody, Mark Panazon here, partner and mortgage broker with Mortgage Connection. Welcome to this month's edition of the monthly technical analysis update and all things mortgages here in Canada. So I've got my 12 favorite things to go over. So without further ado, let's get started. First up is the bond yields, aka fixed rates. We saw a nice little drop here with the Bank of Canada rate cut, and then we sort of leveled out. We had some really positive news from the US. I believe it was the unemployment data, really favorable unemployment numbers in the US. Had nothing to do with Canada, but nevertheless, the bond yields shot up here in Canada, leveled out, market calmed down, and then we've seen 3 out of the last 4 days of rate drops, getting back into this greater pattern of rates dropping now that inflation is under control. So great news overall. I'm going to share the interest rates at the end of the video, so make sure to stay tuned for that. And with that, you'll see that there's a brand new interest rate available in the threes finally. So we are making some great progress. Rates haven't been this low since, briefly in early 2023 and then really dating back to 2022. So we are certainly headed in the right direction when it comes to fixed rates. Now, inflation. This is the Bank of Canada overnight rate next. So the story has been good. The projection here is in red. What the Bank of Canada will cut rates down to this 3% target by sort of end of next year. And so far, so good. We've had 3 consecutive rate cuts. So I think that's fabulous news. This trend will continue just so long as inflation is going to remain low. And look what inflation's doing. So we've had another reading here. Last month's inflation was at 2% after a 0.5% cut. So we were at 2.5% in July, went down to 2% in August, and then the September reading was 1.6. So inflation now is below the 2% target. This is massive news to help propel further rate cuts in the direction we're looking for. And in fact, I've been reading a lot of different articles suggesting that the chances of a 50 basis point rate cut are now on the table, and as high as 75%. So we were always going to get that 0.25% rate cut, but now it looks like we may get that 0.5% rate cut. So that's fantastic news, all thanks to inflation continuing to lower. If you look at the market participant surveys, more specifically the monetary policy report, which hasn't changed since earlier this year, this just kind of solidifies the targets that the Bank of Canada was aiming for rate cuts. We were at 5% in the beginning of the year. We're now at 4.25%, and they're projecting us to be at 4% by end of year. And that's looking like it might be closer to 3.75% if we get a 0.5% cut next week, and then possibly another quarter in December. So it looks like we're going to be possibly overshooting the initial estimate. And what's great with next week's rate announcement is they're going to publish a new monetary policy report. This one was published in April, so that was their projections. And now we're going to get an updated report, which will better reflect what's going to happen next year. Because right now we had a 1% rate cut for this year and a 1% rate cut for next year. If you look at what's actually happened in 2024, which was here, we've had no rate cuts until June, July, and September, and we're almost at that 1% rate cut. We've had a quarter at each meeting. So next week's decision is really important. We might get that 50% cut, and we may also get we will get a new monetary policy report outlining what might be the rate cuts for next year as well. So that's really exciting. If you look at here on Trading Economics, they are projecting for that rate cut to be 0.25%. So that's definitely going to be your base case. But personally, based on what I've been reading and hearing, it sounds like it could be closer to that 50 basis point cut. So fantastic news. Next up is the federal funds target rate. So we looked at the Canadian data. I just want to quickly look at the US data. So we had that big news of the Fed funds target rate, which is the American version of the overnight lending rate or variable rates. So they've also been in this long pause and they're finally cutting rates. So that's really positive. If you look at their inflation, very similar sort of setup. Big peak here in 2022. Inflation's come down, and now it's just continuing to trend downwards. They're down to 2.4, so their inflation in the U.S. is a little bit higher than Canada. Ours is 1.6, but nevertheless, really great news. And we all know that the U.S. affects Canada's numbers greatly. Whenever there's big news in the U.S. up or down, it impacts what happens up here in Canada, unfortunately. If you look at Canadian unemployment, we had a bit of a dip here in September at 6.5%. This was a massive trend of 1, 2, 3, 4, 5, 6, 7, pretty much 7 months in a row of increased unemployment, which adds pressure to the Bank of Canada to cut rates. So we've had a slight dip, but more or less very much unchanged, just 10 basis points difference. So unemployment remains relatively high. If you kind of zoom out, it's not crazy high like we had in COVID of 13% unemployment, but it's certainly higher than we experienced pre-COVID, which was sort of high fives, right? And it was a little bit higher here in 2017, where we got up to 7%. And again, that was the bit of a housing bubble here in Canada as well in 2014, 2015, 2016. So unemployment is trending in the right direction. That's good to see. And then we're looking at the Canada GDP growth rate. So, what is Canada? What do our numbers look like on a country scale of how much gross domestic product, what the growth looks like? And it's pretty bleak. It's still very bleak. We had 0.5 was the last reading, 0.4 before that, 0, -1, 0.2. So if you have weak GDP, that generally means your country is not doing so hot. And so the Bank of Canada may encourage spending by lowering interest rates. So if GDP is doing much better, like in previous years where we've had it closer to, let's maybe do a 5-year example here. Well, we had sort of the COVID blowout, so we had very negative GDP, then very positive. So you take these sort of out, we've sort of just been hovering around 1%. If you go before that, it was, 1%. Not great. I mean, we had definitely much more productive years going back. Oh, I guess it's not been that great either. But nevertheless, it's not over 1%. We're still in that 0.5, 0.4 range. I think we'd like to be closer into that at least 1% range based on history. So lower GDP, higher unemployment, lower inflation, all good signs for more rate cuts to happen. Quickly looking at the Canada housing starts. So housing starts fell off the cliff here in August. So we built almost 280,000 homes in July, which is about half of what Canada or the Liberals have promised. I think it was in April when they had their very ambitious plan to build 500,000 homes a year. We kind of gave them a bit of a break, in April and May because they just announced the policy, but they're not even close to it. And now in August, we're down to 200,000, and then last month, 220. So we're just still not building enough homes in Canada. If you look at some of the real estate stats here, I want to quickly touch on residential average price year over year. So this is September 2024 versus September of last year. So Alberta's up almost 10% in the average price of a home. Saskatchewan, nearly 12%. You can see New Brunswick, Nova Scotia, even PEI and Newfoundland are all up as well, with obviously the bigger markets, Ontario almost flat and BC actually declining in home price. And that's most likely due to people exiting those bigger provinces due to unaffordability and entering into these other markets where home prices are much more affordable. So that's the housing stats. And then the last two items I want to go over, of course, are the interest rates. So, we're looking much more reasonable here with interest rates. If we look at the 5-year fixed rate, we're now finally in the threes. So we have one lender, ATB Financial, who's in the threes, a 3.99% 5-year fixed mortgage. So that's going to be a new rate. We've finally into the threes. It's been so long. We finally got there. And in terms of variable rates, these haven't moved much because the prime lending rate hasn't moved, but that will certainly change next week. So right now, the variable rate, the lowest one is still 5.3, goes all the way to 5.9. So 5.3 is a much more reasonable discount, and this may be 5.05 next week, or if you get that 50 basis point cut, it could be 4.8%. So variable rates will be in the fours finally after years of 5 and 6% variable rate mortgages. So that's fantastic news as well. So if you look at the two sort of lowest rates right now for fixed versus variable, we're at 3.99 on a 5-year fixed or 5.3 on a 5-year variable. If we put these into our simulator here, we got the 3.99% on a $500,000 mortgage with a 25-year AM compared to that variable rate, which is prime minus 1.15. That's your 5.3 rate. Again, on a $500,000 mortgage, that's a payment of about $26.27 a month versus $29.94. And if we try and do some estimates here, we can do that 50% rate cut, which is happening next week, which I think is baked in. I think it's guaranteed it's going to happen. So I'm going to go with that in the simulation. And then I'm just going to go with the basic 4 rate cuts next year, which I also think is really minimal. And we'll get the new monetary policy report next week, which we can update these models and figure out if we're going to get 4, if we're going to get 1.5% cut next year, if there's another cut going to happen this December, which they meet after the October meeting. So again, very modest numbers I'm using here, a 0.5% cut next week, no cut in December, and then 4 cuts next year of the minimum amount. And remember, the Bank of Canada meets 8 times a year. So I'm really being conservative with this estimation. If you look at the comparison, it's essentially a break-even comparison. So at minimum, if we get the half cut in December, and then we get the 4 rate cuts next year, you're saving about $460 with the variable rate mortgage. So the variable rate mortgage would save you a few bucks over the course of the next 5 years. Of course, we're not pricing in any action after next year's rate cuts. We're really just talking about what's going to happen next week, and then the 4 rate cuts next year. We're not looking into any kind of rate cuts in 2026 and beyond. So, personally, what should you do? We have an unreal 3.99 rate finally. Hard to say no to that kind of interest rate, considering we've had 4 and 5% fixed rates over the last 2 or 3 years. But with now the rate cuts coming in heavy, and obviously big news next week will determine if this is true or what we can expect for years going forward. It sure does seem like the variable rate mortgage would be the mortgage to go ahead with, especially if any of these cuts are more aggressive or if there's just more rate cuts in our future. And don't forget, if you look back at the previous cycles here with the rate cut history, this is what's being projected currently. We're going to land at that 3%. So we're currently at 4.25%, which means 1.25% in rate cuts. That's still well above where we were pre-COVID after a rate hiking cycle of 1.75. So this is where we're going to land. I think it's actually going to be somewhere closer between 3 and 1.75, split the difference and call it maybe like 2.5%. So I think we definitely have room for possibly an additional 0.5% in rate cuts, especially when you look at the previous cycles, these massive swings down here, both here in 2000 and 2008, when there was also big black swan events, the dot-com bubble, the great financial crisis in the US, the housing bubble crisis, and then of course COVID now. So I do think we're going to get a bigger drop, faster, deeper rate cuts. All the data is pointing to it. So that's what I got for you this month. Hope this was all helpful. If you have any questions about your mortgage, you know where to reach me. Otherwise, have yourself a great month. And next month's update in November will be really interesting because we'll have the new monetary policy report, probably a 0.5% rate cut, and a few more data points to look at. So we'll see you then.